You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, a program where we break it all down on the futures options side of the fence. Going to talk the commodities, the energy, the metals, you name it, equity volatility, all sorts of good stuff, and a whole bunch more. A lot popping off this week for us to get to. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. We've seen a huge influx of new folks coming on to programs like this. Make sure wherever you're listening to this, keep rating and reviewing. It does help the sea of newcomers discover not just this program, but the entire network. It's more important than ever in these crazy, troubled times in which we live to have some sort of sane, reliable source of content to turn to. We're happy to provide that for the folks out there. So keep rating and reviewing. It does help new folks discover the content. Of course, keep sending those questions, too. We do love to hear from all of you guys. And let's see who we're hearing from on the program today. First, let's go out usually to the FTSE Russell studios. They're doing some work, some upgrades behind the scenes in FTSE Russell studios today. So instead, he's joining us via the magic of telephone. Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to the TWIFO program, sir.
Thank you, sir, and it's a pleasure to be here today. I'm excited to have a really fantastic, lively discussion, and I know it will be.
All right, let's get to it, because also joining us, holding down the CME hot seat today, our old friend, Mr. Derek Sammann, the Senior Managing Director and Global Head of Commodities and Options Products over there at CME Group. Derek, welcome back to TWIFO for the first time in 2021, sir.
Howdy, gents. Happy New Year, and I hope everyone here in Chicago and land is enjoying the additional feet of snow in our backyards. I know I am not personally, but I'm ready for spring to come.
I'm sure those CME snow futures are trading pretty hot and heavy right now, sir. It's a lot lighting it up down there. But let's get to it, Derek. Usually we kick it off talking about movers and shakers. We're going to table that for a little bit because I know you got to run in a little bit. But let's dive back on in. Derek, the last time you were on, it seems like an eternity ago. It was only back in November. Obviously, a lot has happened since November in the markets and everywhere else in our lives. 2021 is supposed to be the quiet year, yet so far it didn't get the memo here. But the last time you were on, Derek, you talked to us about CVOL and what's going on there. Obviously, we've had a huge influx of new listeners even since that show. But obviously, a lot's going on in the world of CVOL. So let's start there. First, really quickly, catch it up for our listeners who may have missed your last appearance. What the heck are we talking about? What is CVOL? And then what's new? What brings you back to our door today, sir?
All right. Well, great to catch up with you guys. Yeah, it does feel like it was not that long ago when we were out announcing the initial launch of the CVOL indices. And to get everyone up to speed, in case you weren't with us last time, CVOL stands for the CME Volatility Indexes. And what we've done is we've taken our market-leading, incredibly deep and liquid 24-hour markets in options across our major benchmarks, and we've developed a volatility index, actually a series of volatility indices, to apply to all of our deepest and most liquid products. So most folks are on your program, Mark, I think are very comfortable with the concept of volatility and movement and measuring movement and expected changes over time. But while there are certain gauges out there already in things like VIX, for example, those are very, very specific to equities and have a very, very specific methodology associated with them. What we heard talking to our global customer base was that not only the increasing demand for using our underlying options products, but they said, listen, you guys have the deepest, most liquid futures markets in the world. You got the deepest, most liquid options markets in the world on the same futures. Therefore, you guys have all the volatility information. Why don't you build into indices that you can roll out and that we can use that as a tool to understand and interpret what's actually going on in these markets? And we said, well, that's great. Let's do that. So we spent the last 18 months developing this proprietary methodology. And I'm very pleased to say that the last time we talked to you guys in November, we had rolled out the first suite of products, which was 2 products in fixed income and a series of FX volatility indices. We announced just 10 days ago the next slate of products we rolled out, which is our benchmark products in energy. So we have now a CVOL index on our WTI crude oil contract and now a CVOL index on our Henry Hub natural gas contract. We rolled out metals products in the form of a gold CVOL index and a silver index. We rolled out the corn and soybeans and wheat, so your primary ag products, and then 2 additional products in the treasury market, so the 5-year and the 10-year. So when you look at the spread of asset classes now, we've got the volatility indices we've rolled out of the last 2.5 months, a total of 16 indices. We've got the, in the fixed income space, we've got the 5-year, the 10-year, and the 30-year. In FX, as we rolled out in November, we've got kind of your G5, and then we actually have a G5 index, a basket of the index. We got our benchmark gold and silver and metals. We got gas and crude and energy, and we got beans, wheat, and corn and ag. So those are now live on our screen. If your listeners want to check them out, all you do is just go to Google and type in CVOL, CVOL, and the first link that should come up is CME Group Volatility Indices. Click on that, and there will be literally anything that you should be able to want to learn and know about these indices. So we're excited. As I shared with you guys before, these right now are being calculated on an end-of-day basis. Now that we have completed the rollout across all 5 of our asset classes, we'll be focusing on getting these into real-time calculation as soon as we can. So that's kind of that's the big story. And what we're most excited about this, Mark, is the fact that we've been hearing for years that customers love interacting with our options markets. And we see that in the insane amounts of continued growth we've been able to generate globally with these products. The next evolution of that and the next natural step in our options franchise is a suite of volatility indices. Now, these are not tradable products right now, just to let everybody know. These are indices that we're introducing to the market for the first time. But this is information you can't get anywhere else. You can't go anywhere and say, gee, what's the volatility of oil today? Well, there's no obvious place and there's no benchmark liquidity center that will give you that price in clear and specific terms. We have built that. So if your listeners are interested, just type in CVOL and come to the CME Group Volatility index page, and you can read anything you want. We've got we got white papers on the methodology. We've got market data there, and you can pull up a list of all of the indices with a terrific user interface that you can click on individual products and just interact with them. So we'd love to have folks in there taking a look at this.
Excellent time to roll out the additional products. No one's talking about nat gas volatility right now, Derek, so I'm not sure why you'd want to add that one. That was terrible timing on your part.
I think the folks in Houston would love a way to manage some of their issues right now. Our hearts go out to all the folks in the South dealing with this tough weather right now. So certainly hearts and prayers go out to everybody suffering through some really, really difficult weather conditions down south at the moment.
Yeah, this is fascinating stuff, listeners. I encourage you to check it out. I'm looking at the CVOL for natural gas right now. It may surprise you. Actually, the high was right around 89 and change. Actually, not right now. Actually, I was back in October 6th of last year. CVOL for nat gas is currently at about a 54. So far below it, maybe lower than you might think, which is why these indices are interesting and informative. Really quickly, Derek, since we're talking about the indices, there's been a lot of back and forth in the vol space. I know we discussed it the last time that you were on about methodology for analyzing volatility. Should you go straight at the money like they're doing, with the NASDAQ and with the vol Q? Should you go more of a skew incorporated route like they do with VIX? It seems like you guys went the latter way. Why did you choose that route? And real quick overview of like the skew methodology, because I know our listeners eat that stuff up, sir.
Yeah, it's a great question. And it's such a great question, and it's a really technical question. So we've put two pieces of documentation on our CVOL site. So folks that want that in the details, nerdy details of the underlying mechanics of it, it's there. We have a summary document, kind of a user paper that says this is how you can think about how it actually operates. But how we actually think about this is our CVOL methodology incorporates every single strike price on the implied volatility curve to calculate the variance. And that does a number of different things for us. It doesn't just take an at the money. It uses the whole volatility surface. And what that does for us, and you'll see this when you get to the site, we publish for every one of our indices, we have just the underlying CVOL level itself. We then have what we call up variance, which is an index on the calls. We have what we call a down variance, which is an index on the puts. We track a calculation of the skew, which is simply the difference between the up variance and the down variance. A lot of people call that the risk reversal or the skew. We do have an at the money, and we've got a convexity calculation, which is basically just the ratio of the CVOL versus as a function of the at the money indicator. So the really cool thing about this, and the reason we use the whole vol surface, is because just telling somebody what the at the money vol doesn't tell you anything. Because if you've got a market with an at the money vol of 20% and a flat skew where there's no bias to the call, no bias to the puts, and a flat smile, that tells you the market doesn't really have an expressed bias or concern about what's going on. And you might say, at the money's 20. I don't know anything more than that. By using our calculations, and because we have developed CVOL the way we have and calculated it such a way, you'll be able to say, hey, the at the money's at 20, but the up skew is 5 vols above that, and the down skew is 5 vols below the at the money. So the risk reversal was 10 vols, and that says, man, this market is really, really asymmetrically concerned about a move up or down based on what the skew value tells you. So what we tried to do is kind of democratize access to the information that sophisticated options traders use as part of their daily tools for understanding and trading markets. So it's really important that you know not just what the at the money is, but what the term structure of volatility looks like, and what the skew of that looks like. Skew to the upside, skew to the downside. Our puts flat with the at the monies, but calls massively bid. And so the risk reversals and the butterflies are all calculated for you, so you can see that directly. And we tried to put these in terms that, in talking to customers on our side, that they understand. I get what up variance is. Okay, I got an index of what the call value is. Now I can compare that to the put value. I can compare that to the at the money. And so it's a whole series of tools, because we use the full vol surface, that we can extract a lot more useful information for customers to use that to understand what's going on in these options market. And I tell you, there's a lot going on in these options markets right now.
A lot going on indeed. So just to overview it there again, summarize it for you listeners, CVOL, it's out there live. 16 products, or I should say indices out there now. What can you get? 30-year, 5-year, and 10-year in the rates complex. Pretty much the full suite of FX there. 6 of the leading FX there as well. Gold and silver on the metals side, nat gas and WTI on the energy side. And then the ag side, you get soybeans, good old SRW, wheat, and coin. So 16 different volatility indices for you guys to sink your teeth into over there, cmegroup.com. Just search for CVOL. You should be able to find it. And again, it incorporates the SKUs. All of you who want some sort of measure of the smile, the SKU, as Derek was just alluding to, there you go. You got it there for you as well. So Derek, like I said, these are end of day right now. You're looking to add more products and indeed to also update it to real time. Any insight for our audience you could share on when you expect these next iterations of CVOL to come along?
Yeah, we've been pretty consistently sharing with the market that our goal was to get the first set of products to cover 2 of our asset classes out there by the end of 2020, which we did. We had told everybody we were shooting for end of Q1 for the next 3 asset classes to roll out, which I hit that early. We rolled out the second week of February, so really excited about getting energy, ags, and metals out there, plus the additional rates products. What we call phase 3, over the course of Q2, we'll hit another rollout of additional products there. We've already got 5 asset classes. We'll drop a few more of the benchmark products in there. So, for example, if you look at our metals market, we've got precious covered between gold and silver, but you'll notice we don't have a base metals market in there. So the most liquid of the base metals is copper, and copper is hugely interesting right now, either because of the China play or just general resumption of growth. And copper is kind of a proxy for global demand and global growth and infrastructure, which, by the way, is one of the few things that is a bipartisan supported initiative in DC these days. So there is a great benefit to looking at, in fact, our copper options market's exploding right now. So you'll see us add in the additional benchmark products that we have in each asset class and just start to fill that out, as we did in phase 2 and adding the additional pieces of fixed income. So you'll see us build out the yield curve and fixed income, add additional products where it makes sense in the other asset classes, and we'll just continue to build. In the meantime, Mark, as you already noted, we've been working since launch back in November on the calculations to get these into real time. So more on that. We actually have the timelines and kind of the buckets and the phasing of our work up on the CVOL landing page as well, with loads of great resources, information, FAQ, a neat little video as to how the term structure works and how the volatility works on an implied volatility curve, et cetera. So there's just some great tools up there. Look forward to having folks interact with it, and look forward to sharing more news as we keep building this out.
Well, before we roll on, Derek, I know when you're not busy talking about all things CVOL, you have another purview which is near and dear to our hearts over there, which is pretty much everything options over there at CME. And spoiler alert, I don't need to tell you, 2020, a bit of an interesting year. Very active year from an overall volume perspective. And 2021 certainly turning out to be no slouch as well. So I'm curious, before you have to roll out, any interesting nuggets, trends, evolutions, milestones you saw on that front you want to share with our audience, sir?
Yeah, real quick. I mean, you're right. 2020 was an interesting one. It was sort of a feast or famine kind of a year. And we saw that in our options markets as well. We actually had 2 asset classes that were just extremely well growing throughout the whole year. Not so, maybe surprisingly, energy options was the fastest growing asset class for us in 2020. That actually outgrew our equity options. That surprises a lot of people over the course of the year. FX was basically flat, and then we had another business, I think metals, was down a couple of percent, and then you had 2 businesses that were really struggling in 2020, and one of those was fixed income. Again, not necessarily a surprise given just kind of the down market, no real expectations for rate movements in the back half of 2020. A lot of that has changed. Now, when you look at I would say that the sleeper story right now is ag options. You heard it here first. I'm going to quote a number to you guys right now. Month to date, our ag options is up 63%. I'll quote another number to you. Our ag options year to date, ag options, 78% up versus this time last year. And these are markets that are doing 370,000 contracts a day, ag options. Keep an eye on that space. Corn, beans, and then probably wheat behind that. But this is right now, it's all about soybeans. It's all about China, and it's all about the significant demand that we're seeing in the exports coming out of the U.S. So, we talk a lot about financial products. We talk a lot about fixed income and equities, but tell you what, this is starting to be year of the ags. We see it in the futures. We saw it in the fourth quarter of last year, and ag options are through the roof. 370,000 ADV so far this year. And I think that number probably shocks a lot of people. It's a significantly sized business, and it is out the gates like a storm this year.
I like it. I'm looking forward to talking about more ags on the show. I know a lot of our listeners will like that as well. I lied, Derek. Before you go, one last thing. We had a comment come in from one of our frequent listeners here, Mr. Baiju. I'm going to cheat and bump it up from our listener feedback segment just so you get a chance to hear it too. He chimes in and says, "Hi, Mark. CME just won the Exchange of the Year at the Risk.net Awards. I thought it might be a good mention on your show for all the hard work done in 2020 by the team at CME." So there you go, Derek. What do you think? So our listeners taking the time to write in just to note that you guys won an award at Risk.net. Derek, what do you think about that?
Well, that's probably the only better thing that your listener could have done is emailed my mom and told her that and made her even more proud. So
maybe he did. I'll have to check.
We sure appreciate that. And it's there's a great piece. Listen, Risk Magazine has been doing this for years and years and years, and we are very, very pleased to have won it again. We're a multiple year recipient of this, but boy, the if your listeners do get an opportunity to take a look at the article, really the focal point of and the basis for the award that was given us on the Exchange of the Year, it was the work that we did in our systems, technology, infrastructure, and ensuring that in some crazy markets of 2020 that we had the robust infrastructure, technology capabilities that customers could rely on in the midst of some crazy price action. And a lot of that was focused on the work that we did specifically in our options market and the ways in which we had created a lot of robust infrastructure and did some work on intelligently mapping some of our strikes and the number of strikes that folks were looking at quoting to ensure that in the times of significant market stress, that customers knew that they should be able to access lit markets in the most extreme volatile scenario. So sure appreciate your listener calling that out. It's a great result for the team as a whole. We're thrilled to death with the result, and we're very proud of that. And I think we've got a link to that article up on cmegroup.com somewhere. Mark, maybe if I can find that, I'll flip it on to you and you can shoot that to your listeners as well. But it's just a good story and a great, so proud to be a part of the team that works this hard for our customers.
There we go. And see, our audience, nothing sneaks past them. They are an observant bunch. Well, Derek, I'm glad we can get you on to give us a little bit of an update. I'll look forward to your next appearance, Derek, because that means we'll have even more to talk about, maybe more CVOL indices to sink our teeth into, and maybe some more updates on the CVOL front, hopefully in the near future, Derek.
Sounds good, guys. Sure appreciate the time, Mark. Always great to see you, Sean. We're still overdue for that beer, man. But as soon as we get vaccinated, let's go have a beer down Rivers downstairs.
Amen. I look forward to that, Derek. And thanks for being on the show today. Just great input. And again, congratulations on all of this volatility. It's just awesome, and it's an evolution of our business. Couldn't be more excited. And our partnership with CME Group over at FTSE Russell is just stronger than ever. And talking about volatility, that Russell 2000 index has been showing quite a performance. I'm sure you agree.
Yeah, fabulous. So a great partnership. We appreciate jointly getting the products out to our customers that benefit them and grow the business and make it a better, safer world for everybody.
There you go. And now you know what time it is, listeners. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers. This is where we break down pretty much the entire week that was, to the upside and to the dark side over there at CME Group this week. Mr. Sean, I'm going to ask you next. Where should we begin our journey, sir? To the light side or to the dark side?
You know me too well. We're going light side.
All right, let's do it to the upside, listeners. You actually have another week where it's not quite 50-50, but it's closer than it has been in a little bit out there. It's still more upside than downside, but there is a little bit of red on the screen too out there. So to the light side, number 5 to the upside. You may have heard of this product this week, making some headlines. This is natural gas, up 7.6%. It was number 4 in the other direction last week, down a little over 1%. Number 4, RBOB, similar story over there, 9.02% to the upside. Number 3, little thing called Bitcoin, up 9.5%. You may have seen it. I had a brief dalliance there with the 50,000 level. A lot of madness going on out there. It was number 1 in the same direction last week as well, up 27.94%. My goodness. Number 2 to the upside. Lean hogs up 14.72%. And number one to the upside, Eurodollar is up 18.18%. It was number one in the other direction last week, off nearly 7%. To the dark side, we got number 5, the 30-year, off 1.6%. Number 4, the Ultra Bond, off about 2.4%. Number 3, the old peso, back on the movers and shakers. They're off about 2.5%. Number 2, a little thing called the E-mini Russell 2000, off 2.75%. It was number 4 in the same direction last week, off to the upside. Number 4, the upside last week, up 4.5%. So pretty volatile couple of weeks for the Russell 2000. And then gold, number 1 to the dark side, off almost 3.25%. In terms of vol movers and shakers to the downside from a vol perspective, it's all Eurodollars this week. Eurodollar 9-month mid-curve April contract off about 15.25%. Eurodollar 6-month mid-curve April contract off about 15.1%, and the 6-month mid-curve May contract off about exactly 15%. So a lot of vol coming in on the front portion there of Eurodollars. On the vol advancing side, not as much vol to be found. Once again, it's in the Eurodollars. April Eurodollar up about 2.2%. The March up about 2.1%. And then we got copper sneaking in there up about 1.4% out there. But before we go any further, Sean, I think we got to touch on the product that's been consuming everyone's attention, hitting us up all week about it. We got to talk a little nat gas. Do you agree, sir?
Absolutely. Nat gas has been on a tear. Absolutely. We've got to go there.
All right. So without further ado, then let's hang our hats first in energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, let's do it. Let's dive into nat gas. You guys, as always, can generate these reports for yourselves completely free. CMEgroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Both of those should work. Note, they are case sensitive. If you do it all in caps for some reason, doesn't seem to like it. So lowercase, if you please. But that'll get you over there. Go to energy, to the drop down, then pull up nat gas, and you're off to the races. Now, you may have seen some headlines this week, listeners, about natural gas hitting these exorbitant levels down there in Texas, $500 and all these other rates. You might have said to yourself, that's insane. They were just talking about it on TWIFO not too long ago. It was $3, $2.90 on that range. And you're right. And coming into today's show, nat gas futures over there at CME, that front contract March has about 5 days to go, is trading $3.08. Maybe saying, what the hell's going on? I'm looking here at the chart intra-week. So around Wednesday is when this future peaked. It topped out almost 329 out there. So that was on Wednesday in kind of the after-hours session, kind of at the height of the deep freeze there. And that kind of points to the notion that natural gas is very much a locally distributed commodity. And that points to some of the issues they were having down there in Texas. I won't go too deep in it now. I encourage you, if you want to check it out, they have actually a pretty cool video over there at CME. If you type in the Henry Hub, it's called Understanding Henry Hub. That is where these futures are being priced out. These are the Henry Hub natural gas futures that are being traded over there at CME. That's in Erath, Louisiana. So that's where these futures are being priced out of, and not in central Texas and these other areas that are having a lot of these issues. Of course, they have a lot of natural gas oriented power plants. It makes sense. You think about it in Texas, the natural gas is a very cheap, readily abundant, readily available product, usually in Texas, because there's a lot of oil refining and oil production going on over there. Natural gas, obviously a byproduct of that. So usually it's easy to come by. And also that means you don't store a lot of it at the power plants themselves. You don't have a huge tank of nat gas ready to power your power plant. It comes via pipelines. When those pipelines are frozen, guess what? Things get a little bit crazy. And now suddenly you have to figure out a way to deliver it, getting nat gas into a truck in a liquefied form or a tanker in the middle of a blizzard and everything else. That's where these things get a little outlandish. And that's where you see these prices start to escalate. But over there at CME, even in the height of the frenzy, it only hit about 330 for the Henry Hub nat gas futures over there. Still a lot of paper on the tape here this week. Pretty active contract. 420,000 contracts lighting it up out here this week. Of that, 75.5%, so pretty much all the paper going up in this March contract that's going out in 5 days. Now, if you listen to the show, I hate to analyze skew and everything else when it's only 5 days to go, but we have no choice. This is the vast majority of the paper went up here this week. If you're wondering what the vol is out there, again, take vol with a bit of a grain of salt. The contract that near to expiration, it's mostly gamma, but still, 73 and a third, up 12 and a quarter points. Also worth noting, I pointed out the CVOL earlier on nat gas. Check that out. That's kind of informative. That'll show you we're not at the apex, even though you might think that given that front future. The CVOL is actually way below where it was back in October. And if you go out a little bit, you go out to the April contract that has 35 days to go. That vol is only a 40. So that's 33 points below where that front March contract is trending. That's actually down 3 points this week. So bear in mind a little bit of madness going on out there. It's a very localized phenomenon. Once this storm passes, you should see a lot of that go the way of the dodo. In terms of skew, we have last week the puts were 11.9%. They were discounted at the money, so they were cheaper than that 73% or what it was last week, which was like 61%. This week, 12.9% cheap to the at the money, so they're discounted by below that already lofty 73%. The calls 11.6% cheap, so not surprising. Calls have a little bit of bid this week. Also not surprising that it's calls where the lion's share of the action was this week. It was all March. It was the 3/4, which again is about where nat gas on the front March contract topped out about 329, and the 3/4 calls were where the action was pretty much all week. Remember, we were closed on Monday, so a bit of a truncated trading week this week. 33,000 contracts going up on Tuesday, actually predominantly closing, 14,000 of that closing. So that's interesting to me. A lot of closing. Maybe some folks they had some call positions on, taking them off. Either that or maybe they were overwriting as well. Nat gas, it's a volatile product, but you may feel you're pretty safe at that 3.25 level. And then you got a little spooked on Tuesday, decided to take it off. Either way, a lot of closing paper on Tuesday. 14,000 more contracts going up yesterday. A little bit of that closing. And then today, about 10,000 contracts on the tape. So total about 60,000 contracts almost going up on that 3/4 call. And again, bias towards closing. So as we flirted with that strike, maybe some folks taking it off as we rally towards it. Maybe some folks taking some stop off. Either way, more closing than I would have expected. I would have thought maybe some more opening to try to take advantage of some of that pop that they expected out there in the nat gas. 3/2 calls also pretty active out there for our number two, and only number two by a hair's breadth, about 55,000 contracts, listeners, 23,600 on Monday. Most of that opening, 18,500 on Tuesday. Again, biased towards opening, and about almost 13,000 today. So pretty active on the 3/2 strike, going out in 5 days, listener. So that's maybe we get some of your more extreme levels. Either way, these 3/2 calls are pretty active. And then let's see, also 4 even calls were also pretty active again. So that maybe reflects some of the irrational exuberance that infected this market earlier this week. 12,300 on Monday, 17,700 on Tuesday, biased towards closing there, and about 6,000 going up today as well. So they're still trading today, the 4 calls. And then 3 3/4 not to be forgotten, 10,800 on Monday, 7,000, almost 8,000 on Wednesday, and about 8,000 today, total of about 26, almost 27,000. So just in that 1 3/4 to 4 call strip, you have 150 odd thousand contracts trading of the 400 plus thousand. So clearly near term upside calls going out in about 5 days was where all the action was here this week. Kind of interesting stuff. Sean, it also is interesting because it speaks to kind of what the localized phenomenon that is nat gas, because obviously the headlines everywhere, Bloomberg, everywhere else you looked, nat gas trading 500 or whatever the levels it got to in certain areas. Yet on the futures and on the options here, we didn't really see that. There, as we keep on rolling, Sean, it is that time now. I'm going to wake you up out of your reverie because it is time. We just talked about all things CVOL, so let's get to it. A little bit of the old equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, let's do it. Let's talk a little bit of equities. If you talk equities, you got to talk volatility. It's kind of point, counterpoint, the other side of the same coin. Coming into Showtime RVX, which is, of course, the VIX of the Russell 2000 at about 32.25. Puts it down almost 3/4 of a point from last show. Obviously still pretty elevated, still north of that 30 handle that's been kind of hovering around for a while out there. So small cap vol still elevated and not surprising. It's moving. Small caps are moving week after week. VIX at about 22.25 coming into Showtime. That puts it slightly unched up about 1/4 of a point from this time last show. Remember, if you listened to our Vol Views show on Friday last week, we saw VIX close below 20 for the first time in about a year, ever so briefly, a couple of ticks below 20. We know it was pretty short-lived coming back in after the holiday weekend. Vol creeping back up and at about a 22.25 here on the show today. VVIX, which is the vol of vol, at about a 121, puts up about 5.5 points. Anything around the 120 level or above is pretty frothy. That means vol is moving, listeners, and vol is clearly moving out there again. And vol Q, aka the at the money volatility of the NASDAQ 100s, at about 23.75, puts it up about almost 1.5 points from where it was this time last. Puts that VIX RVX spread pretty wide at about almost 10 points exactly. It's about 0.75 of a point. Actually, a little bit tighter than it was last week, so it's still extremely wide. 10 points, if you know anything about that spread. Small cap to large cap vol, that is a very wide spread, 10 points. And the VIX to vol Q, which is the S&P 500 to the NASDAQ, that's about 1.6 points. That's about over a point wider than it was this time last week. Remember, that's not quite apples to apples because one's at the money and one's got a skew component, but still, it's a worthwhile, interesting analysis nonetheless. Mr. Sean, so obviously a lot's been popping off in your neck of the woods since the last time we chatted. What is lighting up your tape over there in small cap land today, sir?
We're, again, just fantastic volumes in regards to the Russell 2000 that on both our partner exchanges. Volumes have popped on our partners over at CVOL and CVOL Global and also at CME Group. We couldn't be more pleased with it's upside, and the interesting dynamic is volatility isn't coming in like there usually is an equity rally, right? So there's this continued skew. But let's just talk about volatility. Just it's staying high in Russell 2000, and even with the tremendous performance Q4 and into this quarter, Russell 2000 U.S. small caps are outperforming every major benchmark, and not just in the U.S., but if you look globally, you'll see it outperforming. So it's really exciting to see. But again, as markets rally, you usually see volatility come in. This upside activity in the Russell 2000 just continues. And with that, we have a fantastic product launch coming out on March 1st with CVOL Global, and those being the mini Russell options based on the Russell 2000. MRUT will be the symbol. They're going to be 1/10 the size of the existing RUT contract that trades exclusively at CVOL. These products will also trade exclusively. Some of the key features are they're cash settled, they're European style, so there's no early exercise. It's going to be a fantastic market. I think one of the key things are that notional size being 1/10 the size. That just enters a whole new generation of traders. It also makes institutional traders to really be able to customize their portfolios using that smaller notional product. And I know the CVO has been out talking to all the market participants, from your largest institutional clients to your retail distributors and vendors and sales groups and firms such as TD Ameritrade, I should say Charles Schwab and Morgan Stanley now with E-Trade. So there's a lot of interest in this new mini Russell product over at CVOL, and we couldn't be more excited about that.
Well, let's dive into all things FTSE Russell options, see what's lighting it up. Sean, as you mentioned, it's kind of been an upside frenzy up there of late. We had Matt on and others talking about the madness that is the upside calls in Russell 2000. Seems like that's taken a bit of a break this week. Not surprising because the index has taken a bit of a break this week. It's off about 2.5% so far since Monday. Again, it's a truncated holiday week, listeners, so a little bit less paper to parse out here. But that said, it does seem like, Sean, the narrative of a little bit longer term puts is back, at least for this week. We're at about a 22.29, almost 22.30 out there in FTSE Russell 2000 land here this week, listeners. And it was the June 19.5 puts that led the dance out here. Only a couple of trading days, we're already a couple of thousand going up out there. It's like most of that closing. So some folks maybe taking off some 19.5 puts. So maybe read into that. Maybe that's your bullish sign if you think they're hedging, or perhaps the other way if you think they were selling those puts and perhaps now taking them off before we break through it. Either way, out of the money puts, a couple hundred handles plus out of the money puts now once again leading the dance out here in FTSE Russell. Even though the lion's share of the paper is 34%, still went up in this Feb contract that has 1 day to go. 22 half puts were the most active out there, which again makes some sense. Those were at the money, now in the money puts here this week. So not surprising that we're seeing some action going up out there as well. If you're wondering, by the way, that front contract 1 day to go has about a 30.5 vol, which is pretty close to what we were talking about with RVX, about a 32.25. You get a little bit farther out, you go out about a week, I guess down to about a 28.70 and about a 28.5 if you go out to the March contract. It has about 15 days to go. So vol obviously still elevated out there, but interesting stuff nonetheless for all of you out there. All right, we have some other stuff afoot. Yeah, I think, Sean, because we talked about CVOL at the top, and we also have some interesting questions and or comments from our listeners that mentioned some products. I think we'll get to those now, a little bit of the old futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your feedback. Real quick, Sean, I think you'll appreciate this. Obviously, this was a truncated holiday week because of President's Day here in the U.S. And Sean, as I recall, when you joined us on our election night special late last year, you came armed with some interesting presidential trivia. So I thought you would appreciate this. In honor of President's Day, we took a poll for our audience. We said, let's take an options break to finally settle the endless debate, which president is number one in your hearts? And we gave you bonus points for obscure write-ins. We gave you 4 choices: Washington, Lincoln, FDR, and we threw Truman in there as well. Kind of a fun pick. We got some fun write-ins. But before we get to that, Sean, what is your vote on the poll if you have one? A, and B, more importantly, what do you think our audience voted for?
If you've got, what did you just mention? Washington, Lincoln, FDR, and Truman.
I did, yes.
I would have written in a different name. I'm just saying.
What's your write-in? Go for it.
Ronald Reagan.
Oh, okay.
I'm a big Ronald Reagan fan. Okay, your audience might attack me on that one. But, the wall came down.
Certainly a momentous period that he presided over. That's for sure.
He really was. He was just a tremendous president and leader. And obviously, I was much younger, much more impressionable, but he has definitely resonated as a great president in my memories. But of the 4 you mentioned, I'm struggling between Washington being the first president and Abraham Lincoln reuniting the country during a horrible separation called Civil War. So I'm going to lean towards Lincoln on this one, even though I think it's going to be it's going to be really, really close between Washington and Lincoln.
And I thought Lincoln would kind of run away with it, especially given now where we are in society and how much love Lincoln is getting. Washington was leading it pretty early on. Ended up, Lincoln pulled it out at the end. Lincoln pulled it out of the end, Sean, with 43.8%, followed by Washington, hot on his heels, 37.5%, almost 11%, 10.9% for FDR, and a paltry 7.8% for good old Harry S. No love for Harry S.
Should we challenge the votes and have a recount? I'm kidding.
Don't even bring us into that.
Totally kidding.
Into that quagmire. But speaking of write-ins, I was surprised we didn't get any Reagans or some more modern names slipped in there. We had Kaiser Soze chime in saying Andrew Jackson and Polk are very underrated. He also says Teddy Roosevelt, probably the first and possibly best modern president. Interesting. Teddy Roosevelt, probably most famous for putting his face on Mount Rushmore. He did a little bit more than that, but obviously it's an interesting choice, Teddy Roosevelt. Revon Gorges chiming in, taking a bit of a cynical perspective, which I can appreciate. He says, anybody who's anybody knows William Henry Harrison is the best president. That's because he served 31 days. So he did the least damage as a president. What do you think about that contrarian perspective? Well, Sean, I kind of like that.
That's an interesting perspective. I didn't know that statistic, 31 days. Or did I know that? I don't think that was one of my trivia questions. Good one.
I say you're the presidential trivia guy. I thought for sure that would have been right up your alley there, sir.
That's a good one.
And yet another write-in for Teddy Roosevelt. So Teddy Roosevelt got some love in the write-in campaign out there. Interesting stuff. Kind of a fun little diversion. Let's get into the meat of it now. We got a question here. This is up your alley here, Sean. This comes from Rio the Cat, market technician. Okay. It's a bit of a mouthful of a handle. But he says, incidentally, do you know if options on the old M2K are in the CME pipeline? Obviously, the mini Russell 2000 there, Sean. And also, do you know why options on the mini NASDAQ, I should say, are so illiquid? I didn't know who to ask, so I just gave it a shot. Well, first off there, options on the mini Russell 2000 are in the CME pipeline. Well, we're trading those right now. I think maybe is he referring to the micros you guys have coming up, but those are options as well. You know what he's referring to, Sean?
I think he's referring to the new Russell micro futures that trade on CME.
Oh, okay.
I was wondering if there's a micro CME option, which there isn't yet. But CBOE is launching a micro based on their Russell options contract, which will be found exclusively at CBOE. That's March 1st. So I think that might be, I think that's what Rio the Cat is asking.
Yeah, so many micros being bandied about. Sometimes it's hard to keep them all straight. But yes, he is referring to the micro Russell 2000 futures, which all those micros, and Tim was just on the show last week, all those micro futures have been lighting it up. I'm with you there, Rio the Cat market technician. We will have to get an option on those. They've just listed some recently, so I think we're going to see more rollouts of those coming in the near future because those futures are blowing the doors off of it. So I'm sure Sean will be the first to know, and when he knows, we will tell you out there. And in terms of, he's asking about the others that are out there. He wants to know why the options on the micro E-mini NASDAQ 100 futures are not trading it up. You know, we haven't had a chance to really parse that. We've done the E-minis. E-mini NASDAQ options do pretty decent paper, about 67,000 contracts on the tape so far in this very truncated week. Let's see what he's talking about on the micro NASDAQ front. We haven't had a chance to really pull these up here a little bit. So again, I like select all listeners. If you want to see all the data, it's a good way to go. Be careful with a product like Eurodollars because that gets a little scary. Yeah, he's right. There isn't a lot of paper on the tape here. 1,324 lighting it up so far. That's not bad. But again, also remember, that's a very small multiplier product. So you kind of reduce that overall number by a little bit. And you'll see kind of how many actual contracts are going up out there. So yeah, what's trading out here? Looks like of that paper, 50% of it came in the week 3 Feb contract that is going away in a day. And of that, let's see, the most active contract out here this week was the 13,600 put, which is about 56 points out of the money out there right now. They did a whopping 99 contracts out here this week. You know, this is interesting because you're right. The futures are lighting it up. We haven't had a chance to talk about the micro options as much. I wish I got your question last week. I would have put it right to Tim when he was on the show. Next time we have Tim on, I'll definitely put it to him. This to me is kind of a similar analogous situation to what we're seeing with the Bitcoin futures, which are trading it up, which I did ask him about last week. And yet the options, not so much. I think there may be a bit of a multiplier, scary perspective for that. You don't have that issue here. Obviously, it's a much smaller notional contract here. So you don't have that particular issue, that stumbling block holding things back. The only thing I can think of is that they are still fairly new. They didn't launch that long ago. Right now, you can get options, listeners, on the micro S&P 500 and the micro NASDAQ. Let's go over to the micro S&P and see if we see more out there. That'll give us a little bit better frame of reference out here, listeners. And let's see, so far this week, again, a truncated week, about 12,200. So you're talking almost 10x there. And obviously, S&P is going to do a little bit more paper than the NASDAQ, but still, it's a lot more on the S&P. So the micros are trading, and the NASDAQ is moving. You're right. Just for whatever reason, the folks are not trading it up on the micro net? That's interesting. That's a good question. I'm going to keep an eye on these. I'm going to watch them a little more, get a better sense for the flow and the paper and the vol out here. And I think maybe we'll come back to this topic here. Rio, the cat market technician. And hopefully when we come back to it sometime soon, we'll have an answer too about what we're going to see with these Russell 2000 micro options here. Great questions. Here's another one from Zach Moorer. He says, hi. Well, hello, Zach. First, I would like to start off by saying that I love the show. Well, thank you. We love that you listen. He says, I have learned more from it in the past 2 months, the past 2 weeks. He's a new addition than I previously knew in the past 2 months. I have a quick question. When referencing changes in the skew, specifically being able to identify whether puts or calls were more or less rich in an implied vol space relative to their past history, where can you see that on the report? Just want to be able to really pick up what you are putting down. All right, you know what? It's been a while. This is a good question. We've gone over this in the past, but obviously we have a huge influx of new listeners to the show. And I haven't gone back and really broken down the overall TWIFO reports in a little bit. So I think it's a good time to do that now. So you can explain. I'm sure a lot of you like Zach have questions. What am I talking about here with these various changes in skew and everything like that? So let's go back to Nat Gas. That's what I was just talking about earlier. You guys can find this in the drop down. Remember, listeners, cmegroup.com/TWIFO or /TWIO. Go into the energy drop down, then go into Nat Gas. It's going to be the top one, that LN one. The other doesn't really do any real paper. And then once we get to there, you can see the TWIFO report. I use select all for the expirations. In this case, like we mentioned, it was all the activity, 75% was going away in that contract. That has about 5 days to go. So let's go column by column. Obviously, you have the symbol there first. That's the contract you're actually looking at. That's the symbol for the month and the future that you're trading. You're looking at right there, the contract. And then you have days to expiration. That's pretty straightforward, DTE. That's going to show you how many days you have left until that contract goes away. Then you have the actual future column next. That next to it has the level where that future is trading right now. That's 3.05. Below it, it shows on the left the net move in terms of points. In this case, it's 0.141. That's since this Monday. So that's just this trading week. And that's a total of about 4.84% next to it. It breaks it down by percentage as well. Then we move over to the next three columns. You see they have the heading there of volatility. That's where we're going next. Below that is strike. So you're looking at that contract is 3.05. That's just the three strike pretty much. That's just telling you what strike we're looking at. Next to it is the at the money. And that's going to tell you where your volatility is, your volatility on that at the money strike. In that case, I said it was about a 74.5 for that March contract going out in about 5 days. Below it, you have the net change. So 13.37 points. It's green. So that indicates the vol has increased by 13.37 points over the course of this trading week. Next to that is the shift and slide. I don't think we really have time to break that down. That's a very informative and completely unique tool to my mind. I don't know any other analysis platform that provides that. And what that means in a nutshell is when you look at a volatility surface, a volatility skew, as you move along it, as the underlying moves, you have a predicted way that volatility should behave. That's what the volatility skew is. And that as you move along it, you should hopefully, if that volatility skew is correct, the vols should move as predicted. It doesn't always work that way. In fact, it usually doesn't. So that metric tells you how much volatility is sliding along the curve versus how much the curve has shifted. The curve has changed. That's a very involved. I think we should spend more time on that on a future show because it's a very cool tool. We don't have time to really break it down that much here, but there's a good video over there on the site if you want to check it out or go to the Bantix website. They have videos explaining exactly what that is. That's a very cool tool. Below that, next to that is a 25-day risk reversal, call over puts. That's pretty straightforward. If you know what your 25 delta call, 25 delta puts. So that's 50 delta risk reversal. That's what that's measuring there. But next to that is what you're asking about, which is he puts 25 delta. It's really a 50 delta. That's a little long-standing niggle I have with Nick and his team over there. It's just a joke. But 25 delta call, 25 delta put, they break it down what they call quick skew. And so that shows you a number. In this case right now, it's showing 4 numbers effectively, top left and right, and then bottom left and right. The top left number is where the puts were last week. In this case, they were 11.6%. Now, this is where it gets confusing. That little p next to it. If it's lowercase, that means they were cheaper. than the at-the-money. I know it's a little confusing. You got to just learn the nomenclature of the system. So last week, these puts were 11.6% cheaper than the at-the-money. Now look to the other side, the calls. They were 18.1% in this case, and that's a capital C for the calls. They were 18.1% rich to the at-the-money. So if the letter is capitalized, it's rich. I know it's a little confusing. They probably should swap in maybe an arrow or something like that and make it a little bit clearer for you guys. I've been doing it for a while, so it's kind of old hat to me. But yeah, 18.1% rich to the at-the-money when you see the capital. This week, they were 12.9% cheap, so getting cheaper. And the calls were 11.8% rich, so getting a little bit less rich. So that's where we get those skew numbers. And moving across that, you got put to call ratio, total volume, et cetera, so on and so forth. We look all the way at the right corner as well for that most active column, and that's where I get which contract was really lighting it up. If you're looking at that total volume column, a few to the left of it, you'll see what percentage of the overall volume traded in this contract here. In this case, it was 75.3%. So most of the paper went up here. So that's a quick overview of the TWIFO reports. I hope that's helpful for you guys as you're following along. It's a very useful tool. I've said it before. I'll say it again. Their tagline is all the stuff you can never find all in one place. And it really does apply here. It's an extremely useful platform. There's a reason why we built a show around it, because it's kind of unique in the analytical space. It's pretty much the only game in town for a lot of this data on the futures options front. So if you're trading these things, if you're thinking about trading, if you're just curious, you're seeing all this news about nat gas this week and you want to see what's going on in the actual trading futures versus some crazy spot market over there in Central Texas, have at it. Go check it out here. It's pretty fascinating stuff. You can get it for free. You can't beat the price. CMEgroup.com/TWIFO or /TWIFO. That gets you the basic report. You can upgrade. There's a lot more tools they have available over there for Nick and his team. They have premium versions. If you're going to trade them, I encourage you to check those out. But start with the free report, kick the tires and light the fires. It's fascinating stuff. And I think for you, Zach, and everyone else out there who's new, it's definitely worth taking some time. Even if you just trade the equity indices, go look at those and see how the skew is lining up. There's nowhere else you can really see the skew that easily on these major indexes. So it's extremely useful information and it's completely free. So check it out, CMEgroup.com/TWIFO. All right, Mr. Sean, that was a long-winded answer, but a great question, Zach. And I wanted to make sure we got to it here on the show because I'm sure you are not the only one who has that question. Hopefully that helps. If you have more questions about these reports and how it works, and I do think it's worth maybe down the road doing a more in-depth tutorial on that shift and slide mechanic because it is pretty cool stuff. But unfortunately, that music means we have to go. I want to thank our guest, Mr. Derek Sammann, the guy who kind of oversees all things options over there at CME. So we like whenever we can get him on the show, get a little bit of an insight on what's going on. These CVOL things, it's pretty cool stuff. You guys are always looking for more volatility indexes to sink your teeth into. You can't trade these yet, but that's hopefully coming. Also, hopefully going to have more than end of day. So a lot more to look at from an overall volatility suite. So that shows CME is putting some interest and some effort into all things volatility, which, given our audience, I think you guys will like. And Mr. Sean, obviously our audience likes all things small cap these days as well. So if they're intrigued, if they want to look forward to something, or maybe they just want to read some articles about all things small cap and volatility, where should they go? What should they do?
Mark, it's always a pleasure to be on the show. And it was fantastic to have Derek Sammann on the show. You know, we could just, I wish we could kind of kidnap him because, he covers commodities and he covers all options, right? So you've got the lovers of metals on our show here. And all options. It's what we talk about. So I was very nice to him, not getting him to just dive into Russell with me and talk about Russell 2000 futures and options, because we could have just a complete show with Derek and it would just be fantastic. He's got just such a fantastic way of talking. So
I will tell him that you do want to kidnap him, though. That may change his mind about you.
Maybe friendly encourage him to join us. Yeah,
a friendly kidnapping. There we go.
A friendly napping. Yes. But back to information. These new products coming out on CBOE on March 1st. If you go to the CBOE's website, CVOLglobal.com, there's a couple of key blogs. 9 key features of the Russell 2000 index. along with the new mini Russell 2000 index options. MRUT is the symbol, MRUT. A couple of blogs there. There's going to be a couple more. There's going to be a lot of information coming out in the coming weeks. So be on the lookout for that, and just more coming. And of course, you can always go to FTSERussell.com/blogs and look at all the Russell 2000 small cap analysis from a domestic view to an international view versus international markets. It's all there. FTSERussell.com/blogs.
There you go. FTSERussell.com/blogs is the place to go. And on behalf of Sean and everybody over there in FTSE Russell land, and Derek and everybody over there in CME land, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing. I know a lot of you are in the same camp as Zach and others. You're new to the show. You're new to these markets. Welcome. We love you all. We'll hold your hand through these crazy, tumultuous times that we're all living in. Remember, we're back again tomorrow, noon Central, 1 p.m. Eastern, to break down all things volatility. If you like vol, listening to a show like this, you probably do. Check out that one. It's going to be a good one, Volatility Views. And we're back again on Monday. Kick it all off, noon Central, 1 p.m. Eastern with the option block, and then the crypto rundown, then the interviews on Tuesday, Wednesday, Education Wednesday, and then back again next Thursday for another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.